Well. Trump saved crypto. Is it a sell the news event? That'll be very interesting to see if it actually does decide to roll over in good old crypto fashion. How are we, ladies and gentlemen? I hope you're all doing well. We've got lots of things to talk about. Well, actually, no, not really. It's just one of those. Is New York going to wake up and be like, yeah, baby, let's roll into the crypto? Trump is now making Solana, ADA, Ethereum. Apparently, he loves Bitcoin and Ethereum. So, yeah, and this goes back to the idea of if altcoins are done or not, and only a few of them are going to actually survive. Well, you've got Solana and ADA up there with Mr. Donald Trump. That will not be happening now. So the idea is today going to be a good day for cryptocurrency? Now, I don't know if you guys saw it, but you saw that guy who opened up $127 million long in Bitcoin and $70 million trade in Ethereum, or one way, either or, okay? Now, apparently he sold off, making himself around $6.3 million worth of profit. Now, yeah, did he know something? Probably. And then Trump comes out and puts out that cryptocurrency, crypto strategic reserve is going to then happen. All right, cool. Now, what we're looking for is Utah, Arizona, all the bills that they're trying to get passed to make Bitcoin a strategic reserve coin for their funds or treasuries. Let's just hope that's the case, guys, because if that is, then based off last week's reversal point that we highlighted, Bitcoin has every reason to continue up purely from sentiment. So we're going to get into the charts, break it all down. Mad love and respect. Pump day's a good day. Mad love, what's going on? Tino must have been where have I been liquidated? Tino never on point, but always on point. Nice. Can you guys be nice, please? Can you please be nice? Trump is getting too spicy on the international front, and the insider trading is madness. Of course it is. But guess what? Trump's going to be revealing an investment later on today, so you can appreciate what the markets are going to be like. He is going to be talking yet again. So, yeah, I'm staying out of that, bad boy. Let's get with the program, ladies and gentlemen, understand exactly what's going on. Thank you so much for passing through. 3 states have already declined the Bitcoin reserves. Yeah, but last night we got the biggest endorsement from Donald Trump. So let's see if it all actually comes into play. Here we go. So you're seeing a lot of activity on the euro because of all the gang in Europe are like, yeah, okay, Zelensky meeting with Trump. I mean, have you seen those AIs that they're doing with Zelensky smacking up Trump? Anyways, everyone has a problem with voting for Trump right now because he's just causing chaos across the board. You are aware that tomorrow is officially the tariff day where Mexico and Canada actually experience the tariffs. Now, the impact of that, well, it's going to be another story, but the euro is making a significant move to the upside today, given that it is at 97.97%. Now, there is a lot of volatility on the euro, which naturally means that we've got dollar dominance coming down. Go over to the dollar dominance. And what I'm doing right now is just helping you understand the logic of why everything will go up or everything will come back down again. So from the basis of currencies, when you see the dollar dominance coming down, the logic says that assets against the US dollar will appreciate. So you see dollars going down, the euro's moving up, but the Japanese yen is not going anywhere. Why? Because dollar yen is up. Now, when you see the dollar yen moving up, the euro moving up, something's wrong there, which tells me that there could be a bit of a problem with euro moving on. I mean, it is moved up nearly 1% for the day. And usually when you see that volatility in Forex pairs, they do normally have to bring things back into the fray to regulate the price action. Even the IMF comes out and says to market makers, yo, man, we know you manipulate the game, but please just be mindful of it. Don't throw currencies too far, because currencies all rely on interest rate differentials. So if a company or a hedge fund wants to take advantage of the euro in one aspect of it all, so let's just go and have a look. So you've got this CME FX swap rate monitor. And fundamentally, hedge fund managers do look at this and the rates that they can get euro at, lock it in for a period of time against the US dollar, and see if they can make any money from it. So right now, the euro implied rate differential is at 1.77%. And it's been around that 1.7 region for quite some time. So if we work it out, if someone were to invest in the euro by selling dollars and going into the euro, they're locking in a 1.77% implied rate differential. What they're really locking in is roughly around 1.3 to 1.5% because there are fees involved when they do that transaction, but they're still getting a good return on a 14-day period. So that explains why the euro's moving up, and then, of course, the dollar's going down. The Japanese yen's not really seeing too much, but tomorrow we've got good old Ueda speaking, and if he turns around and says that they are going to increase the interest rates on the Japanese yen, that's probably going to cause a little bit of a flight to recovery on the back of the grounds that those guys who are trading dollars, they're going to want to get rid of those dollars and convert them back into the yen and make themselves a little bit of profit because the dollar itself has appreciated by 6.3%, hitting a high earlier on of around 7% in the last week's trading. So you can see that dollar dominance itself is still strong, and there's still a lot of purchasing power that people can get with the dollar. Now, with that being said, quickly going over into our dearly beloved Bitcoin. Look at that mad move to the upside. How do you project it? How do you look out for it? I mean, we can assume the idea that last week when we were talking about Bitcoin reversing from this range, anyone that caught that reversal, you would have made some money. Just go and look at the last video that I did that said Bitcoin should reverse from here. So go into the channel, check that out, and you'll understand the logic of why we're expecting Bitcoin to mark up. Now, would we expect it to go up so aggressively? I expected Bitcoin to come up towards the red vector candles in principle, but not so fast. And that's only because of this news announcement from Trump making the US cryptos to be added to US strategic reserve. Now, it says here that Sunday, Solana, Cardano, Ripple are to be included in the US strategic crypto reserve. And of course, the market has reacted positively. Now, let's just go into the calendar to understand what we've got going off today. So if we just refresh this, ISM manufacturing PMI will be coming out very shortly. Now we've got to bring it back to the macros. Understand, we're waiting for the Federal Reserve to give us the idea of when they're going to be cutting interest rates. Go back into this calendar over here, guys, and you can see that in 16 days' time, the FOMC will be meeting. So we know that from now until 16 days, we're going to be getting a plethora of data coming out, which is going to let us know whether or not the Fed is going to cut interest rates. Now, going into this, what they show us on this is the rate bets that investors have, or the belief and expectation that they think we're going to be getting interest rate cuts or not. Right now, it's moved up to 95%, so they do believe that we're going to get a cut some point, that the range is going to be between 425 and 450, so not so much a cut, should I say. But this will fluctuate as the data comes out. So this week, we've got ADP non-farm, we've got non-farm employment change, and we have been seeing a trajectory of the labor market to start coming down. And as long as that starts coming down, that, in my opinion, is going to be the only reason why the Federal Reserve will cut interest rates. If the labor market shows weakness. Right now, it's just performing at stellar levels. Still at 4% unemployment rate. That is brilliant. The lowest in 50 years. Can it be maintained? Now, Trump wants to do all sorts of investments and save money here and there. Of course, when you've got Congress and all the guys that are going to be losing their jobs, people that have been making money that don't exist, that are 110 years old, receiving benefit from the United States government. Well, you know, it's just an absolute anyways, you get the idea from what I'm trying to say. Now, let's just go over and have a look at where we are from a sentiment point of view. As it stands right now, it says here that the risk on, risk off indicator is suggesting that investors are actually risk off. Can we justify it? What do we mean by risk off? It means that, risk is on in principle, but when I say risk is off, it implies that investors are looking to go into safer environments. So if you go over to the chart right now, you can see that we've got the 10-year bonds market. That's not trading too well today. It's down 0.3%, but it is progressively moving up. Investors are locking in yield. You can see the 10-year yield, 2-year yield is at 4% again. And then we've got the 10-year yield coming in at 0.88% for the day at 4.2%. And then the 30-year is coming in at 4.5%. They say that when the stock market or the yields turn to around 4% region, that's where it's a good time to start buying stock. But then if Warren Buffett is actually sat on $380 billion worth of cash, that explains why his share price for Berkshire Hathaway is nearly at $1 million. Now, just having a look at where we are from the stock market's point of view, you can see here that we've got quite a few distribution days on the NASDAQ and the S&P. Now, this is very important. You've got 8 days on the NASDAQ distribution, and then you've got 7 days on the S&P. What does that mean? Well, distribution days are days where there's institutional selling, and then accumulation days is where you've got institutional buying. So you're seeing it build up, excuse me, you're seeing a lot of it being built up on the NASDAQ and the S&P. Frankly, with the NASDAQ, it's always going to be volatile. It moves up and down, and it can be subject to a lot of volatility. But when the S&P itself, which is not so volatile, When that's also racking up distribution days, it could tell us that we could be in line for a bit of a sell-off, which means that word on the street is across the board that you should be selling the rallies, okay? Now, we've just had a big endorsement for cryptocurrency, and Bitcoin is yet again doing that move that we've been looking for. We've been wanting to drop down to recover the vectors to then try and make the move back up. This move back up, in my opinion, was a premeditated move. Trump knew exactly what's going on. All of last week, all you had was tariff, 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 tariff. The market drops, 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 drops. And then all of a sudden, let's bring in the crypto reserve, because he hasn't really mentioned much about cryptocurrency. He mentions it, you get this result right here, and it shifts to the upside. Happy days. Looking at it from this perspective, guys, we just go over to look at the Coinbase Premium Index. Remember, anyone talking about they're selling Bitcoin? No one was selling Bitcoin. They were buying it, going into the order flow. You can see that over the last few days, we've seen nothing but bids, 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 bids. They've been bidding Bitcoin left, right, and center. Now, as I said last week, retail needs to be looking for a reason to start buying crypto, which means that the guys who are going to be selling the rallies, they're stepping in right now. And you can see, excuse me, you can see that we've got quite a few people wanting to sell the Bitcoin, and a lot of them are selling Bitcoin. You've got one order right here, which could be taken out today. If we have a look at it, yeah, you got $30 million worth of Bitcoin to be sold at 93,777. But $30 million of Bitcoin is not much, excuse me, in the grand scheme of things. But what's going to trigger retail to step in and encourage more people to sell it? So if you're looking at it, everyone's now talking about Bitcoin to 250,000. Okay, we want to start looking at 250,000. We need to break the all-time high and sustain it. This needs to be our new area of support around the all-time highs. Now, Bitcoin has done a good job of moving away from these lows. You do have a little bit of a structure here, which could look like there's a little bit of an M formation, drop, retrace level 1, continuation to the downside. What would lead Bitcoin to go lower? Well, if you've just encouraged the idea of a crypto strategic reserve, would you want to be paying for high premium prices? Well, that goes on to say something else. Well, let's just go and have a look at the ETF itself. Now, there's been a lot of people going onto social media talking about Wall Street's behaviors in the sense where they are they're selling the Bitcoin spot ETF, and then they're going short in futures markets and what have you. As it stands right now, we're currently at 577,000 with the ETF. Going into the order flow, we're not really seeing that much activity in the sense of anyone selling. You've got a 300 Bitcoin sell-off on BlackRock's ETF as well, but I'm not really seeing too much from BlackRock either way. But what you've got to be mindful of is this. With this strong move to the upside, what you are effectively trading right now is people's excitement of the crypto strategic reserve. In other words, if you are all in longs right now and you are loving life, make sure you maintain the idea of having profits, because there could be an instance where it starts to roll over again. Remember, tomorrow we've got the tariffs. They do go into play unless they say otherwise. Trump did say March the 4th, Mexico and Canada are going to experience the tariff enforcement. So if that's going to be something that impacts crypto and the stock markets overall, then we expect everything to start rolling over, okay? So if you are in good profits, guys, lock something in. I'm not saying for you to get rid of your exposure, but just make sure you're locking something in, because the sporadic nature of the marketplace means that at any moment, Trump can put out a post on Truth Social. He can say absolutely anything he wants, which can have an impact on the stock market. Your nice move up could end up being a negative play, and you'll end up being frustrated because you caught an unannounced pump to the upside. I mean, even if you look at it and you saw this red vector candle for the hybrid system traders, you are expecting Bitcoin to try and recover that red vector, but no way would you be anticipating such a big move to the upside like this. You can look left and say, yeah, we're recovering the vector candles. That's fair and square, but not at such speed. And the problem with speed is the faster they move up, the sooner they could actually move back down again. But we need to see commitment from traders inside of this range. Now, going into this week, guys, we've got the most important range that is forming at the start of the week, which is the Asian session high and the Asian session low. This is a very important range for the crypto week and for all the other assets across the board. What you've got to do is mark off Bitcoin at these levels. And if Bitcoin can sustain itself above the 94,900 region, and it can show commitment to breaking away from that point, then the idea is that the rest of the week will see Bitcoin moving away from that point. That's the logic with the Asian session range that forms on a Monday. Because if they really meant business at marking price high, then this Asian range for Monday should effectively see assets across crypto appreciating to the upside. You need to see a break above 94,900 for that to be the case. Any questions, ladies and gentlemen, before we get into some more flavor? Tino Babyface. All right, conversation between Randy and MR. I know more about Trump than you, Dylan. Used to be a supporter. Guessing you know. Okay, listen, no politics in this live stream. Politics, man. Listen, you voted, you got the dude. Were your options really decent? That's another story. Anyways, what's the big announcement Trump is mentioning? He's apparently going to be doing an investment. What's the investment? No one knows. No one knows what this investment is. Let's have a look at ADA. Let's just put that into perspective. Some guys are getting excited with the Cardanos. I mean, boy, this thing. And you know what's frustrating? XRP is in exactly the same spot, man. Like, it's a very frustrating asset to look at. It's $2. I mean, we were talking about it last week and it was $2.70. Now we're at $2.67. Brilliant. What an asset. Here we go. What we got here? Tina, they're marking up Bitcoin at the start of every month and then the entire month they keep dumping it. Well, let's see if that's going to be the case. We'll know with the Asian session range today. That's the logic. Okay. Everybody's here to make money. Let's focus on our commonalities. That's correct. Any other questions? No questions. No questions. All right, then. So, here we go. The CME gap. Right. Okay. So they've been doing very well for these gaps. Yes, that's why I'm saying to you, lock in some profit because the move from now, remember, you've got New York, which will be opening in the next 10 minutes. They're going to react to what's going on. Okay. So when New York sees everything's pumped, everyone gets excited, you'll see a little bit of movement in crypto. But be mindful, this gap right here is not good. It's not good at all. There would have to be a very aggressive move from these current levels to suggest the idea that they're not going to fill this gap anytime soon, because Bitcoin's created gaps before and moved away from them and traded away from them for quite some time before coming back to it. If we go and have a look at the last CME gap, which was all the way down here, look at that gap right there. Did they come back to it straight away? No, they didn't. And now this was around the ETF hype. And you can see Bitcoin starting to mark up. They did not look back at that gap. They didn't. It was only not so long ago that they come back into it. So look how much time they spent trading away from that range. Look how they just come into it, tapped it to make the reversal from that point. So it's a big area right there. So we know there's massive support in here. And by the principle of technical analysis and the way people behave in terms of levels, the idea is that you could assume Bitcoin could come back into that point to go back up again, except that your Bitcoin can come down. It really can. And it can go back up again. And if you want to stay in the fairy world of it only needs to stay high, I need it to be higher and higher, wake up, man, because this game is being violated. You're all being played because Bitcoin is Wall Street's bitch. And that is the truth. And if you can't accept that, then you're going to be subject to a lot of BS that happens in this marketplace, right? Should the president even have any impact on Bitcoin? No, unless he's talking about it, fine. But all of last week, Bitcoin was going up and down, it was moving down because of the tariffs. Why should the tariffs affect Bitcoin? If anything, it should encourage investors to seek alternative and go to Bitcoin, but they don't. Because the money in crypto is Wall Street's money. And that's the truth. Your dudes in cryptocurrency have been washed out. That's my belief. We were gonna have a bull run no matter who's president. We had a great one when Biden started and he was, oh yeah, okay, look, yeah, I understand that, but I'm even hearing about people saying Bitcoin could go down to 10K. I'm reading articles and they're all saying that Bitcoin's about to roll over. You know, and this is the problem with cryptocurrency. Everyone's got an opinion about it. You know, I've got an opinion about it, but I like to make things ideally. When I'm looking at the way Bitcoin's behaving, I see psychology of people. This right here is people buying Bitcoin, but the wrong people. What do I mean by that? Well, they're being sold to, and we know that from the order flow, because look at all these orders. Look, 8 million's to be sold at 91. You got this here, like 4 million was sold at 92. When it's going up and it's pink, it means investors are selling the Bitcoin. So they're selling the rallies. And when you've got such a strong bond market right now, it's telling you investors are trying to remove risk. All right. And that's a bit of a problem. You really want the bonds to be going down and the stock market to go up. You don't want the bonds moving up and the stock market going down, because it tells you investors are taking money off the table and going into a safer environment. Because remember, institutional fund managers have their old conventional portfolio split, which is 60% of the products that they have, or should I say 60% of the capital goes into stocks, Forex, you name it, okay? Higher risk investments. Then 40% of the portfolio is gone into bonds. So the idea is that those guys look like they're going into bonds, so they're trying to protect their balances, protect their capital. And when you see that happening, when the bonds start going up, it tells you that there could be a change in psychology. So I'm not saying I'm trying to piss on your parade kind of thing, but what you've got to say to yourself is, if you've made money, awesome, because that's what you're here for. But a lot of people looking at this and like, that's it now, Bitcoin's going to 100K. I hope it goes to 100K. But at this point in time, we don't know what it's going to do. So we have to set our expectations to realistic levels. If you've met, how many are you in longs right now? If you are in longs from here, from the 80 mark, you are laughing. You really are. Why? Because if Bitcoin was to drop from this point, let's just take a Fibonacci, right? And split the range. If Bitcoin was to give back what it's done and you've been long around the 78, 80K mark, you're still sitting okay. You don't really have anything to worry about. In other words, there's still a lot of room for Bitcoin to make a bounce from that point, okay? Now, if you're long on Bitcoin from the pump and you entered long around the 90K zone, well, you're going to be then subject to a bit of volatility. Hopefully that's not the case and that Bitcoin continues to move up from here, all right? But you've got to just keep it in your mind and say to yourself, right, do I have money that I can lock in the chart? Fine. So if you've taken a long on Bitcoin at the 80 zone and you're long from this point, how much profit are you going to earn if you lock in price at this range right here? So you've made $7,000 gain in Bitcoin's price. That is wonderful, okay? How much profit does that make you? If it makes you $1,000, fine. If it makes you $5,000, fine. 10 grand, awesome. Lock in 10 grand. Because it means that you don't care what happens next. You've already got the guarantee you're going to make money whether Bitcoin goes up or down. If it continues to go up from here, congratulations. You can then start moving and protecting profits. Protect, protect, protect. Don't move up your stops so close to price where, yes, you would have locked in 10 grand at this point right here, and then it moves down a little bit, triggers you, and you're like, yeah, man, I paid myself, and then Bitcoin just continues higher. What you've got to give Bitcoin freedom to do is, firstly, the market's going to react to this crypto strategic reserve. So that's what you're doing right now. You are allowing the market to react to it. If you see the market reacts to it in a negative way, then you're going to start taking some profits to lock in the benefit of you going long at 80,000, and you've got yourself an 8K move in Bitcoin. Happy days, right? Don't make the mistake of putting your stop loss right at break even. That is dead. Because Bitcoin could roll all the way back down and you'll be like, at least I didn't lose on my trade. No, you did lose on your trade because you had money up here and it's now dropped from 93 all the way down to 84. So you're taking a 9K drop on Bitcoin and then your entry down here and you're like, yeah, but I'm breaking even on this trade anyway, so I'm okay. No, you're not. You're cheesed off because you just allowed Bitcoin to drop and you didn't pay yourself. Because when you think about it, if you were to take profits at this level right here and Bitcoin does come down, you now have more money to take advantage of the dip. When the dip comes into play and then you think that price is going to stabilize in this range right here, guess what? You now have more money to place a trade. You place the trade, it then goes in your favor again. But guess what? You now have used a bit more cash because you've earned yourself more cash. That means you need Bitcoin to move. You don't need Bitcoin to move too far up for you to make the same amount of money that you did from when you bought it at 80,000. So from 80,000 all the way up to the current point at 92, you've got yourself a 12 grand move in Bitcoin. Now you've got more money in the charts and you've got more money to play with. That means you can stay in the chart for less time and then grab a 4 grand move in Bitcoin, which will effectively net you, hypothetically, if the first move netted you 10 grand, then this move will net you 5, but you're in it for half the time and you only need half the price movement. See what I'm saying? But it's the knowing. No one knows if that's going to be the case. All right? As long as you're locking in some profits. And the same people that I say lock in some profits are going to be the same people that come to me and say, you told me to sell. No, I told you to lock in some profits. That means you can split your position up. Okay? So this is something that... So when it comes to playing certain positions, conventionally, most platforms allow, when you open a trade in crypto, all right, so you open a trade like this from this point and you add to that trade, your average entry goes up. Now with BTCC, this is really important, all right? BTCC have an order mode, which means that every order that you place in the chart is a static order. Your average entry doesn't go up, okay? And that's powerful if you do want to scale into positions. That's why when I trade on MT4 and MT5, I've got that luxury, okay? So with BTCC, you can do that. So get involved with BTCC if you want to check that out and change it in the settings to order mode, all right? It's in the description for you. Great for anyone in the United States because you don't need KYC or VPN, all right? But here is an example. Imagine you go long on Bitcoin at 89,000. You see there's support. If you take a long normally, then your average entry moves up, which compromises you. Well, guess what? With the order mode, you can place an order right there and that order stays static. It doesn't move. So then that means you can manage your expectation of your order inside of this range. If it doesn't work in your favor, you can just close the order and you still got the money down there in that trade. Happy days. Say again, it goes in your favor and moves up even higher. What can you do then? Well, you can then add to the trade on the first retrace. That means you've got this order here and this order here. That order mode on BTCC is great for anyone that wants to do the 20-20-20-40 method because you can split it. Rather than moving your average entry, you're splitting the order up in terms of your capital, all right? So that is a real benefit if you are that kind of trader, investor that wants to scale into trades but without having to worry about your average entry moving up, because then it goes up in your, if it goes up and you've taken another trade, then what happens? Price then starts coming into your entry point because you've added to the trade, and then you end up becoming in a bit of a drawdown because your average entry moved up. All right. So go check that out. Tino, it's your fault if we lose money, you dope. It's our fault if we gain money. Don't you know this, man? You funny guy. You funny guy. Let's have a look at NASDAQ. What's she doing? She's behaving like a nut job. Yep, NASDAQ's going down. Yep, it looks like this is pre-Trump. Trump having a conversation pretty fast on the old NASDAQ. Yeah, the pay yourself has been beneficial. I can appreciate that. Babyface T. Have I got babyface? My days, man. I ain't got no babyface. You know what? If I shave my face, and that is something I will never do, but if I were to shave my face, boy, you're dealing with a virgin. That's how bad it looks. It looks so young. It's scary. Any questions, guys, before we get on with it? It's all good, my man. Thank you very much. When it comes to tariffs, do you think the market has them already priced in? No, I don't think they have them priced in. There's too much pricing in. We've got a price in the idea of interest rate cuts or not, okay? We've got a price in the idea of Bank of Japan looking to increase their interest rates. We've got a price in the idea of the tariffs hitting the Eurozone. We've got a price in the idea that the Federal Reserve is waiting on certain bouts of data. So there's too many factors to price in with no clear definitive direction of the pricing. What do I mean? Well, do we know what the true impact of the tariffs is going to be? Are we going to get them? It says we are. But are we going to see the true impact of it? How do you price in the tariffs when the possibility of them bringing bringing inflation higher? What aspects of the tariffs are going to impact certain aspects of the United States economy? And if you keep seeing the employment market showing strength and the tariffs are coming into play, the market's like, what do we do? How do we price in the problem of tariffs? You could look at the chart and say to yourself, maybe there's a possibility that this drop to the downside has been the tariffs being priced in, okay? But every time he mentions tariffs, price goes down. So it's not priced in yet. That's my logic, ladies and gentlemen, okay? Cool. What's up with euro and dollar dominance? Dollar and euro, right? They are moving in tandem, but you've got to be very mindful and pay attention to dollar yen. Dollar yen is still holding out. Just be careful with that bad boy. Gold is making a nice flavorsome move to the upside. That's happy days right there. And if gold is moving up, investors are seeking the safety of gold. But when you've got, the problem is the expectation of interest rates going down has been betted right here. Now, if they believe it's going to come down, sorry, it hasn't going down, sorry. when interest rates are going to come down, gold goes up. With this drop to the downside, okay, it's all been based on the data that we've been getting to suggest that interest rates are going to come down, which logic says that hedge fund managers have been loading up on gold to effectively see the recovery back up. They hedge themselves for tariffs. Now we're going to be seeing gold making a move to the upside. That would be the logic. NASDAQ is looking wonderful, ladies and gentlemen. Nice little pump on NASDAQ. Bitcoin should be following suit, okay? Tino, off topic. You look slightly oriental. Nah, man. Nah. Nah. Never mind. But mad love for that. Mad love for that. Okay? Just as a quick update, ladies and gentlemen, as well, we are going into the... Where is it? We're going into the ISM, all right? So just be very careful with that. The market is moving a little bit erratically right now. So when we get the data regarding the US, if we see a reading below 50, there's a contraction. That's why I'm saying keep an eye on the dollar. Because if this data comes in and shows that the economy is doing fine, there's no reason to cut the interest rates. Dollar should be going up. Because then that means yields will be higher for longer. All right? So just take that into consideration when you are trading throughout the day. For more information on the hybrid system, which is what we talk about all the time, get to tradersreality.com. I'll be doing a video later on this evening just to see what shenanigans have unfolded. But if you've enjoyed today's live stream, hit the like button. Do that red button that says subscribe. It's free to do if you want more flavor. All right? Welcome back, gang. Let's hit this market with its absolute madness of Trump talking shh every bloody day. All right? Take care of yourselves, gang. Peace.